Harsh, we'll leave it at that. In fact, we've got Siji Philip as well joining in from Axis Securities to analyze how ICICI Bank's performance has been. Siji, hi, evening. How are you reading into ICICI numbers? Seems like a beat on all counts.
Yeah, good evening. Yeah, it is another strong quarter for ICICI Bank. So the numbers have come in better than expectations on most counts. So we see that the loan book has also grown by 16% year on year. NIMs are stable, which has led to a good, healthy growth in the net interest income by 23%. Non-interest income is also up by 6%, so it is better than peers, which has been reporting. So non-interest income at 4,900 crores is also good enough figure. The improvement in PPOP is also good, considering that I've seen some increase in OPEX during this quarter. But cost to income at 41% versus 39.9% quarter on quarter, but still it is on a trajectory which the management had earlier commented on. Another key positive is the improvement in asset quality. So slippages have come down to around 4,018 crores, down 28% quarter on quarter. GNPAs have improved further. We see that the provisions have come down around 27% year on year, so indicating that the credit costs are normalizing, so it is around 1% compared to 1.4% quarter on quarter. So this has all led to, the strong growth in PAT, which is up by 25% year on year and 12% quarter on quarter.
Sure. CJ, but what I want to understand is for a stock which has really been, one of the consensus buys on the street, we've all seen as to how in the year gone by as well, we've seen a bit of a divergence, if you can call it that, within the entire private banking lot. And ICICI Bank has clearly, been at the top of the hem in terms of a stock price performance. Are these numbers enough in the current market environment when we seem to be slipping lower by every given day, although just a near-term move? Are these numbers enough for you to now rework your price targets in ICICI Bank? And would you then move them upwards? Are the numbers bullish enough for that?
See, on the credit cost front, definitely it is a big positive because we see that the credit cost is normalizing. So definitely there would be some downward revision on the credit cost front. And another key factor which will help the stock performance is that it is continuously outperforming its peers. So that is another key factor which we feel that will help the stock performance in the near term as well. And another factor which will help the stock performance is also that on the valuation front, the stock is still has some reasonable upside. So yeah, the stock performance is likely to continue, and we could see some upward revisions in the target price as well.
Okay, great to hear that, CG. This is definitely going to be one stock, I guess, on everyone's radar come tomorrow morning or Monday morning, actually. As would be Reliance Industries. Big boy Reliance Industries, remember, reported its numbers well post market hours on Friday evening and put up a strong show despite elevated expectations.